Did you know that Elon Musk, the CEO of Tesla, just issued investors in Tesla shares with a dire warning regarding the second quarter? Is this something to be happy about or something to be wary of? Be sure to listen in to learn the purpose of the warning. Tesla has long held the top spot among EV producers. Due to recent global events that have had an impact on the economy, analysts, investors, and stockholders have all been closely monitoring the corporation. The stock market had been seeing a decline in the pricing of stocks, including those of Tesla and other major companies. In today's video, you will find out about the huge warning Elon Musk just gave to Tesla stock investors about quarter two. Electric car and energy generation and storage systems are designed, developed, manufactured, leased, and sold in the United States and other countries by Tesla, an American automobile and sustainable energy corporation. With aspirational and environmentally conscious objectives, Tesla rose to global recognition. Actually, Tesla is the top car maker in the market for electric vehicles. In the first 3 months of the year, Tesla delivered 310,048 cars, a quarterly record that exceeded analysts' predictions despite the supply chain problems caused by COVID-19 lockdowns. Accelerating the deployment of electric vehicles offset supply chain difficulties. Among other reasons, this is one of the reasons why investors in Tesla shares were optimistic when other businesses were having trouble finding an alternate solution due to supply chain bottlenecks and shortages of chips. Tesla rewrote its software and shifted between suppliers in an effort to keep its plants and factories operating. Additionally, Tesla just inaugurated 2 new production sites in Berlin and Austin. Along with the operations in Shanghai and Fremont, these new plants also aim to enhance production. Elon Musk, the CEO of Tesla, has a reputation for encouraging employees to race to the finish line by sending out company-wide letters close to the end of each quarter and for shipping a large number of vehicles in the last weeks. He encouraged staff members to take pride in the excellent genuine items they produce in a later memo. Musk said to the staff in the first email, "We actually build great real products that people love and that improve their lives and the world." That is really insightful. You know in your heart that it was an honest day's labor. I have immensely more respect and appreciation for you than the richest guy on Wall Street, regardless of what else is going on in this crazy world. At least what you are doing is pure goodness. The world's richest man, however, sent another email early this morning warning of layoffs among salaried personnel and expressing his extremely bad feeling about the state of the economy, which stands in stark contrast to the emails praising and encouraging one another. Additionally, a leaked email to staff members stated that Musk urged Tesla workers to increase their efforts after supply chain problems caused the company to have a very difficult quarter. In addition to the COVID-19 epidemic and the Russian-Ukrainian conflict, which have had a significant impact on the global economy, Musk and other financial analysts anticipate a global recession. Investors are faced with a conundrum, as Elon Musk has stated before today. The Fed is undergoing a period of vigorous monetary tightening. Inflation is at its highest level in 40 years, and leading corporations estimate stock market returns of less than 5% until 2035. It has never been more difficult or important to restructure your portfolio. Where then can you go? According to a recent JP Morgan analysis, alternative assets are now required. Some platforms have emerged that provide access to the best alternative asset classes in light of this new normal, and one in particular really stands out to me. It is known as Masterworks. Masterworks has established itself as a reliable source for modern art investments. For a fraction of the price that billionaires spend, they get you access to their exclusive assets by well-known artists such as Banksy, Monet, and others. Because in addition to being a natural inflation hedge and a means of diversification, between 10 and 30% of the total portfolios of almost 2/3 of billionaires are allocated to art. It is logical. After all, the prices of contemporary art have shown the least link to stocks of almost any significant asset class, outperforming the S&P 500 total return by 164% between 1995 and 2021. 3 paintings have been sold by Masterworks since its founding, and each one has given investors a return of more than 30% after fees. While previous performance cannot guarantee future outcomes, 30% is still a really good percentage. The waitlist for Masterworks is actually skippable. Visit the URL provided in the description. Referring back to the previously reported leaked communication that Musk sent to his staff, he stated, "The main cause of this quarter's difficulty has been supply chain and production issues in China. We must thus work together to recover." Musk went on to say that Tesla is ramping up operations at its Austin, Texas plant and that its Shanghai manufacturing is operating at full capacity again. Additionally, he mentioned that this week the Fremont, California plant set a new record for output, while the Berlin factory produced about 1,000 automobiles. Before we continue with the video, make sure to hit the like and subscribe button to watch more of our Tesla stock content. The zero COVID policy applied in China led to COVID-19 lockdowns, which compounded Tesla's supply chain challenges. The company, like others, has had difficulty obtaining required parts and supplies in recent months. After a 3-week break, the Shanghai factory started up again in mid-April, which resulted in Tesla producing over 50,000 fewer vehicles at the plant than anticipated, per multiple reports. Workers at the plant were compelled to sleep on the production floor while they were employed in a closed-loop system. Musk stated to the Financial Times in May that he did not anticipate COVID-19 lockdowns to cause long-term problems. Speaking with the Chinese government recently, he stated, "I would not expect this to be a significant issue in the coming weeks. It is evident that the lockdowns are being lifted quickly." This quarter's lockdowns weren't the only thing straining Tesla's operations. Tesla's stock fell recently as a result of Musk's protracted attempt to acquire Twitter, which he had to sell off part of in order to raise $44 billion for the buyout. Musk reportedly told Tesla staff members that he had a very bad feeling about the U.S. economy and that the business would stop employing people elsewhere in the world. Additionally, Musk hinted that Tesla would fire roughly 10% of its salaried staff. It should be mentioned that Elon Musk warned Tesla staff members earlier this month to anticipate a nutty end-of-quarter delivery tsunami. An employee questioned Musk about when delivery cycles will level off to avoid the crazy end-of-quarter delivery push during the recently held company-wide meeting. In response, Musk said, "This has been difficult since late. This quarter will not be any different from the others in that there always appears to be something that goes wrong at the end of the quarter that makes things crazy, largely because of the enormous challenge we faced with the COVID restrictions in Shanghai." The Shanghai factory was essentially closed for a significant portion of the first quarter. Only now is it returning to full production. This quarter will be quite demanding. In an attempt to calm the staff, Tesla's CEO stated that, barring unforeseen circumstances, the company should see a considerably smaller wave. Gigafactory Berlin will increase production and free up capacity from Gigafactory Shanghai, which is now exporting a lot of vehicles to Europe, starting in the upcoming quarter when things should gradually improve. In a recent video, veteran investor and fellow Tesla bull Cathie Wood argued that the Federal Reserve's decision to hike interest rates by half was incorrect. She also said that since China and Europe are currently experiencing recessions, the U.S. may also experience one. She concluded that the decision to raise interest rates is incorrect because there is currently significant pressure on both the U.S. and global economies. The founder, CEO, and CIO of ARK Invest, an investment firm with $60 billion in assets that makes bets on cutting-edge technologies like genomics and self-driving cars, Cathie Wood, an American investor and renowned stock picker, advised people everywhere to proceed cautiously at all times. Of course, one should exercise caution in where they invest their hard-earned money, even in the absence of the fear of a worldwide recession. Exercise should be done with a good understanding of the international market and careful surveillance of the stock market. Visit our channel to view more of our videos if you liked this one.